Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room. Hope you're keeping well, and we're about to trade the US Open fully live and interactive. Apologies, we're starting this webinar just a few minutes later than normal. So for those of you that are perhaps interested in learning how to trade the financial markets, I suppose from a position of understanding and knowledge, we can certainly help you as an organization. So we have a wealth of resources available for traders through our website. So for more information, just simply go to thelivetraderoom.com and feel free to speak to us if you need to through the chat function there on our website. And we do cater for whether you're trading the markets, whether you're a day trader or whether you are a part-time trader that perhaps have sort of 15 to 20 minutes available every evening. We can cater for you here at the live trade room. Okay, so let's get into it then. We'll start with our risk warning, if that's okay, and we'll see what opportunities we have for the trading session. So we're coming off the back of a long weekend, with yesterday being Bank Holiday Monday. Please take a brief moment to obviously familiarize yourself with the risks involved in trading these financial markets, and it's that trade-off between risk and reward that's very, very important for traders. So and we do help traders in terms of making sure that our traders know how to calculate trade size properly, so that you have an understanding of how much capital you're committing to each trade. Very simple things. Okay, so without further ado, let's get up the FOREX factory just for our news flow, and we'll see if we have any major news events that we have to be mindful of. So today now is Tuesday the 4th of May. Overnight we've had the RBA statement, and we can see how that's influenced the Aussie dollar in just a moment. We've seen the dollar strengthen across most markets again today. Yesterday we had a bit of a rebound. Today we're reversing yesterday's moves. So with all of that in mind, as we look through the news events, and you can see 1:30 p.m. today we've got Canadian dollar news, but these are all very, very minor news events. Anyone trading in New Zealand, just be mindful, the New Zealand dollar that is, just be mindful you do have employment data out later on this evening, or should I say later on tonight. And the employment picture is improving globally, as many of you know, and a lot of the indicators are kind of improving in line with the fact that the vaccine rollout is getting to it's being rolled out properly. We're getting a lot of, admittedly, first world nations getting up to speed with this vaccine rollout, and as a result, economies are beginning to come online. Those restrictions are being removed, and we're going to start seeing some capital flood towards growth again. So we shall, and that's why monitoring the data will be actually quite important to just see. They remain on track to reach 20 million. Sorry, that's our squawk service, so I'll put that on in just a moment. So as you can see from a news perspective, we don't really have a huge amount to have to deal with today from a data point perspective. Okay, so without further ado, let's have a look at the charts. We'll see what opportunities we have for you this afternoon. So it's probably just worth just taking a little bit of a step back. We're obviously coming back off the bank holiday. We've got this, this is the euro dollar, by the way, and we've got the 120 level here in yellow. So that's just important, and it's just an observation, really. We are technical traders, so we do want to observe these important levels and see how price interacts and behaves at those levels. And price has just bounced off that level again today, as you can see. If I can just get up my pen. Here we are. Okay, so if we could look at the recent price action just around that level, is that there's an understanding that prices can bounce off that level below the 120 until you get the breakthrough, and then prices can bounce off it from the upside. So what this tells us as traders, and it happens, and it's happening again today, is we need to be looking for buying opportunities above the level, looking to buy above, and there's the 120. And we want to look for selling opportunities below that level. So that just puts us in a slightly difficult position right now, because the momentum is very much to the downside for this market. So what we've got to ask ourselves is, will we get some confirmed breakout to the downside below the 120? If so, we've got some important levels down here. In around the 119 levels. So we have the 50 period moving average and the 200 period moving average just coming into play, and that's very much likely to be a level of support if prices do break through the 120. So to the downside, if you're talking about a profitable risk reward on a market like this, you know, you'd probably be looking at risking 30, 35, maybe 40 pips on a trade to the downside if you want to stay out of kind of a bit of erratic volatility. And you're already looking to benefit from sort of 40 to 50 pips. So it doesn't really give us a fantastic opportunity from a profitable risk reward perspective, which is ultimately why we trade these financial markets. So that's just the state of play. And if we zoom out, you can see where there's an argument that suggests we could see some further downside selling. There's your 100 period moving average above the current price. We've got so really we're in this congested zone really around the 120. So what we generally want to do around times like this is to stack the odds in our favor with a little bit more clarity than what we currently have. The pound next, and from this we really deduce. From this analysis, of course, we'll be able to identify some higher probability trades for the session. If I just bring this level up. So again, Friday's trading, we made it clear to our traders, the last day of a trading month can be a little bit volatile. For one reason, it's when a lot of your big institutions can reconcile their trading accounts, i.e. book in profit, hit targets and things like that. So as a result, what you can often find is a little bit of adverse selling, if the market's pushing to the upside, and buying if the market is pushing lower. And that's really what we saw on Friday. So it was just that rollover trade. It turned into actually an excessive move, but it's kind of a purely technical move, with the mechanics of these markets. So we were mindful of this selling creeping in. Didn't quite think we'd get as much selling as we eventually, experienced. But the fact remains, it does remain. Last Friday was a bit of a tough day to trade, because our overall direction is actually still to the upside. And we're looking for that dollar weakness trade is the trade that we're looking for. The dollar Swiss, sometimes it's worth just taking a little bit of a step back with these markets. You could look at the bigger time frames. You can see where we're at, and as you do zoom out, you do get to benefit from a slightly improved view of these markets. And that's really what we can experience in markets like this, currently up on the screen. So, so this is the weekly view. So we've really had a lot of selling creeping in, as you can see over the last 4 weeks on the dollar Swiss level. If we look at it on the monthly time frame, you can see the up and down nature of this price action. So the higher probability trade in a market like this is actually below the monthly low, which is just below today's daily low, which is the 90.75, or should I say this week's low. So that's the direction in which we want to trade these markets. Now the question is, will we get some prolonged support for the dollar? We don't perceive that that's the case, although price action is moving in that direction as things currently stand. So it's always about developing, I suppose, a trade idea. We don't really need all of these lines up in the charts, but they're intraday levels, so we can. Often the most important levels are the previous day's highs and lows. The rest are not so important. If any of you are trading any markets and you'd like us to have a look at them, more than happy to do so. So we're seeing some capital, flood into the dollar against the yen, and it just perhaps shows you how weak the yen is versus the dollar, and we're beginning to see that. If I just take this to the daily time frame, so we're very close to these more recent highs regarding the yen. Sorry, more recent lows regarding the yen. So if we look at the daily time frame, we're up at these higher extended levels regarding the yen. So by far one of the weakest markets has been the dollar yen trade. Shall I say the yen over the dollar? So the weakest currency out there has been the yen, followed very closely by the dollar. And that's the only problem with trading the dollar yen, is that you want to avoid trading weakness with weakness. You want to try and pick the stronger currencies and trade them against the weaker currencies. That's ultimately the objective of trading currencies. They are the cheaper markets to trade, or the more accessible, however you want to look at it. The opportunities are plenty. It's obviously an asset class in its own right. But when we start introducing things like commodities and indices are a little bit more expensive. But the reason why we look at multi-asset classes is to assess the market conditions and be able to understand the correlations behind these markets. So what I want to do is just have a very brief overview of the dollar right now. So we can see it's strengthening against the euro, it's strengthening against the pound, it's strengthening against the yen, it's strengthening against the Swiss, although it looks like we could be running into a little bit of resistance as things currently stand. The Canadian dollar, we're now beginning to get some prolonged strength now against the CAD. The Aussie dollar has taken this roll to the downside, and New Zealand has just broken this little level in here. So what we're experiencing right now is dollar strength. The reason why that's important for us to know what the market condition is for the dollar is because we get a lot of our signals from these equity markets, and we're in a. In fact, I could just saw some recent selling creeping in. So we're getting a decent move to the downside. This is kind of a strong floor in this market, actually. I'm not too sure why this bit of selling is beginning to creep in. Just looking through some of the. In fact, we put on the squawk, and we'll just hear if there is any sort of news that's created this little bit of a. This is referred to as the kind of a structural failure to the downside, where prices
we are looking for a catalyst for this leg low we've seen in stocks here.
Okay, so it doesn't look like anyone really knows why this little move to the downside is actually happening just yet. So we've got all these lows sitting in here. Market is pushing to the upside. We have a bit of wobbly price action there, as you can see. And what these markets are telling us is we're failing to make new highs. and this is actually technically the beginning of a reversal signal. So we get these lower high type environments, and then we get the constructive break to the downside. So that's what we refer to as a structural failure. So the structures are pushing higher until they reverse. Now we've got this level in here, the 41.74. So we want to see if this market closes. We could probably put a double level in there. So it's just a strong zone of support and resistance, and this is why we like this. So even let's see how long ago this move occurred. So only in the last 10 to 15 minutes. So we look at it on the 15 minutes.
The G20 nations have given their backing for efforts for safe international travel.
Okay, safe international travel should be a positive for the indices rather than a negative. So that's probably not likely to be the case. This yellow level is our all-time high in the index markets. So this is definitely one to watch. We'll keep an eye on this one. So the S&P to the downside, it's very much in line with this dollar strength story that we're looking at. So we've got the US Open now, where we get capital flooding into this market from the US in about 15 minutes. So what we'll do is we'll identify. We're definitely in a risk-off market condition. You can see that across the board. This is now another very, very interesting move. This is a clearly defined double top now, and we're just beginning to break through this level to the downside. So we might get a couple of really good opportunities out of this trading session in the end. It was looking a bit indecisive over the morning session. We were wondering if prices would ultimately break through these levels. And it seems as if now we are actually getting that little move, and you can see potentially where this market can bounce back to in and around this level down here. So perhaps a decent move. So really we're talking about US indices. The Dow Jones, we're pulling back off these highs. We're not quite in the same situation as we are with the other markets, but what that means is we can maybe look to focus on the S&P and the Nasdaq, and then the Dow Jones may very well follow suit, and we can get into that perhaps at a later date. Yeah, Finbar, I see your comment. The pound New Zealand, we'll absolutely have a look at that now in just a second. Just have a look at these. So risk off across the board. Again, just comparing and contrasting the DAX, for example, and the FTSE. The FTSE's in this little zone in here, and yes, it is bouncing off the highs, so you'd expect it a little bit further to the downside, but very much range bound. You compare and contrast that with the DAX. Now this is a structural failure again, where prices are pushing to the highs. Then we make a low, and then we attempt to make a new low and fail. And now this market looks like it's breaking through. And this is a psychological shift in this market. This is why this area here is so important, because that is when all your buyers start to get really nervous and very well may look to exit their positions. All these stop losses might be placed under these levels, and that's when they'll be looking to book in profit on moves like that. Okay, so you got the dollar CAD. You got a short from last week. Like, that market has just been moving sideways now for 4 or 5 days. So, or 3 days, should I say? And today's the 4th. So really, above the 123.20 level, you would expect a little bit of a pullback. It really does depend on your entry price, where you're looking to enter, because we'd expect some resistance maybe inside this zone. I'll tidy this up in a second now for you guys, so we can have a coherent trade plan for the trading session. The oil markets have been quite strong last couple of days. Yesterday and today, we've seen some nice move to the upside. So, Finbar, you do have that going in your favor as far as the dollar CAD is concerned. So, on a 15-minute time frame, the close has just pulled back to the 41.77, and now we're just getting to see if we can get further commitment to the downside for this market. So they look like markets that are intent on selling off. Look at it on the daily time frame. So we have markets attempting to push higher. Yesterday's was a little bit of a reversal, and now we can perhaps look at a bit of a short-term sell. So, okay, let's put this together then. Your entry, Finbar, was the 24.54. Let's have a quick look. 24.54. So yeah. So your entry level is at this price. We've broken through the monthly low, the previous monthly low. We extended to the downside. You've got the opportunity to give it a little bit of time around this level. I suppose when the market is telling you to sort of book in profit is actually around the 123.20 level. So we've pushed to the downside. We then got a lot of consolidation within this zone, up and down the whole time, and now we've kind of reversed back to the upside. So the problem with this move is you're exposing that capital. So hopefully you've mitigated risk completely on the trade, so there's no exposure to the downside, and I assume you're in it for further upside. You see, broadly speaking, is there is strong support in this little zone in here. We really don't need all of these, so I'm going to take some away. Good afternoon, Fakon James. I hope you're keeping well. Yeah, look, I see your message. Yeah, what was the cause of this? We were actually looking through the news channels.
A few people pointing towards reports that the Chinese military entered the Taiwan ADIZ yesterday. We do see this headline pretty much every day, so we doubt this is behind the leg low we saw in stocks. Just to let you know, he's doing the rounds. Headline did drop around 2-3 minutes after the move as well.
Okay, so that's probably the reason for it. For Con James, it sounds like the Chinese military entered waters that they shouldn't have done, and anything which lends itself to instability or nervousness or trade wars, they weigh heavy on these US indices markets, or they can do. So any thoughts of like a conflict would put things like the stock markets under a little bit of pressure. So maybe that is the reason for it. We're just looking at a few of these charts off screen. The problem is, Finbar, with your entry is that you're exposing it.
A spokesman for the UK government says they have no plans to accelerate the easing of lockdown.
So we had the extended move to the downside, and now we have no idea what price this market could actually end up getting to. So really the opportunity, if you wanted to just see it out today, and if we get some further continuation above the 123.51, then you'd probably be looking at booking in profit if you can. You really don't want this moving an extra couple of hundred pips to the upside, which is, it's possible. If we're looking at the recent highs, if prices break above this level, just sitting in here, and prices push back, this is the next level that we're likely to get prices pushing back to, the 124.68. So book in profit at these lows in the near future if prices continue higher, and maybe look to get back into it again at a higher price. So that's kind of certainly how we would approach that one. Okay, so why did everything just sell off? Yeah, what caused this? Well, we didn't know initially, but apparently, as you heard from the Squawk service, apparently there is concerns about conflict with China entering waters that they shouldn't have entered, and obviously that's threatening to a certain degree, and any kind of conflict in that part of the world wouldn't be good for the US indices markets either. So this market could correct really quite quickly, and that's why everyone's so nervous about these indices markets. Yeah, the DAX dropped 150 points in 20 minutes. Yeah.
Next up on the docket, the US trade balance at 1:30 London time, 8:30 Eastern.
Yeah, so they've bounced off their lows now for Con James, which is good. It just gives us an opportunity to just perhaps pause a little bit. So there's your selling that you've seen, in the last 30 minutes. Just stabilized a little bit and maybe start to strengthen somewhat. However, some of these markets are showing really good opportunities to the downside. Now, our overall bias is still to the upside, but look, there's a nice little handle to the downside for these markets. So we can easily expect some continuation down to the 14,804 level for the DAX, and we do have a relatively straightforward technical stop loss. So these are all levels that we'll get set up now to see if we can capitalize on those. So it's really the German and the US. So the S&P, the Nasdaq, and the DAX should get our attention really over the course of the session. Crude oil as well. With economies beginning to reopening, it's likely to increase demand. So it's getting a bit of an uplift since yesterday. So Friday's selling. We're seeing an uptick now in crude oil once more. Gold, we want to see a decisive move either above the 1797 or actually below the 1760 level, something like that. And we're currently within that zone, and we have been now for 2-3 weeks. So we can be nice and patient with gold for now. The yen, there's not too much clarity really just yet. The yen's getting a little bit of support. And it's not that clear really either in the euro pound. So we'll look to see if we get some continuation across the dollar strength trade. So it's a case of looking for the higher probability dollar strength trades. They all have reasons to be. So let's look at the euro dollar to the downside, the Aussie to the downside, and the New Zealand to the downside. So let's put these markets into play. So okay, so what we'll do is we'll put the dollar pairs just along the top, and we can just keep an eye on these. We'll change the details now for each of those, and just along the bottom deck we do want to monitor the S&P, the Nasdaq. So we'll just stick this in here, and the last one was the DAX. So James, I think you were looking at that one, so we shall also be looking at that one as well. So these are all on the daily time frames for now, so we'll just switch that up to the daily time frame just so we can monitor it, and we can just keep an eye on the price action of these markets. And we've got these markets as well on other screens as well, so I'll keep an eye on them as we're going through. So look, we're approaching the US Open. These are the markets. Now we just need to determine what would be our entries, where we would be looking to get into these markets, and to do that we need to have a look at them on the smaller time frame. So we can look at them in perhaps the hourly chart. So the one thing to the downside that would be quite interesting would be a break below this little low just in here, which is below the 120. And like we keep saying about the euro dollar, like, forget strategy and whatever approach you're adopting. With the euro dollar, because the 120 level is such a psychological level, it's so important to the central banks. We hear the ECB talk about the 120 level all the time. Whatever your strategy and however you want to trade markets, just be a buyer above 120 and be a seller below 120. And we don't need to make it any more complicated than that. Then of course, however you want to engage and whatever strategy you use to actually get in and out, then at least you, especially when we're straddling the 120 level, try, for example, this, we've seen a little bit of selling off, but just be mindful we can get bounces off that 120 back to the upside. So it's just a lower probability trade, where the higher probability trade will be looking for structural failures to the upside, or if prices break below, to actually get in further to the downside. So this is the level that we would like this market to the downside, below the 1993 level. So what I'm going to do, I'm going to go, because we've done our analysis, we understand that the equity markets are selling off, we understand that there's dollar strength creeping into the market. We've also got crude oil slightly out of kilter, pushing to the upside. So we need to sort of bear that in mind. But definitely for now, a structural failure trade to the downside is the opportunity. In fact, we've got an actual level to get into this market now. So this is a high probability below the 119.93. So this is our plan for this 119.93. So this is our plan for this market. So we can monitor and we can keep an eye on it. So keep an eye on that. So the euro dollar to the downside below the 119.93. So we've identified the market, the direction, and the price at which we're looking to engage these markets. If price and the market performs as per expectations, fantastic, we can look to get in. If it doesn't, then we can be patient and wait for the opportunities to evolve. So we can do these levels quite easily, I think. So let's look at it on the daily time, on the hourly, should I say. So this is actually really quite an important level just in here. What you want to do is, if you're experiencing a structural failure trade, which is exactly what this is, you kind of want prices to break below the lowest price. Okay, so it is 10 pips lower, but so we can look to we've got a high probability sell trade below the 76.90 level, 76.90, and we'll just turn it red just to indicate to you that we are looking for a sell trade in the Aussie dollar. So the last dollar pair that we're going to have a look at okay, this one's quite interesting because we've already broken this level to the downside. So there is your strong break below the 71.44. Let's look at it on the hourly. 71.44. There is that break, and it was a defined structural failure trade to the downside. So now you're looking at a pullback to the 71.44 level. So it's a high probability pullback sell trade around the 71.44, 71.44, and it's red because we're looking to sell this market. If you just wanted to know what type of trade it is, it's a breakout sell trade. It's a breakout sell trade. So we understand the dynamics of breakouts and pullbacks, and that's an important, for those of you that are wanting to be sort of knowledgeable and more informed traders, then understanding what type of trade you're getting into is all part and parcel of that sort of education. So you can have slightly different expectations, and the situations occur where you can have slightly different expectations regarding your risk exposure in certain types of setups, and i.e. you can vary it slightly. And it's the same with on the profit side, whether it's a pullback or whether it's a breakout. So and you can trade the structure. So you might have a smaller stop loss on a pullback because prices have pulled back, 30, 40, 50%, whatever the case may be. You might be able to get away with a smaller stop loss, which then enables you to generate more profit on that trade. Now, breakouts can be quite explosive for slightly different reasons. If it's a structural failure trade and you get a constructive breakout, like you might find a lot of capital flooding into the euro dollar below that 120 level. Just the fact that it's 120. So you can trade depending on the type of trade it is, whether it's a pullback trade, whether it's a breakout, whatever the case may be. You can trade it accordingly. So I can just see the indices markets just along the bottom. They're just pulling back off their lows. So we shall go in and have a little bit more of a look after that. Quite explosive move to the downside, I guess. If we decide to pull the trigger below the 41.71 is a sell trade. I'm not going to call it a decent trade or necessarily a high probability trade. It is a trade. The reason being is it's a secondary trade, so secondary trend, should I say. So without a shadow of a doubt, the bias in this market is to the upside. We're up at all-time highs. So what we look to do is look for buying opportunities until situations like this occur. But they are a lower probability trade because you're running into all buyers that are looking to buy the dips. So what that generally means is you get in, you might want to mitigate risk a lot quicker. You don't want to give it time to sort of evolve, which you would do to the upside. So you can take all these things into account when you trade these financial markets. Okay, so now this is a high probability breakout sell trade below the 41.71. And what we'll do is we'll just turn it red, and this is just purely for your benefit, just so you can identify quickly what are we looking to do with these markets. And broadly speaking, we're looking to capitalize on a weakening stock market and a strengthening dollar. So that's what we're looking at. We just want the Aussie dollar to break below that 7700 level, which is where the current price is now, and it might be difficult to get that pullback now on the New Zealand dollar, but we shall wait and see. What we don't want to go doing is necessarily go jumping in 30 pips lower than what we would have liked. The Nasdaq, so we've got this structural failure to the downside, so this is really why we're looking to sell this market now. So let's have a look at it on the smaller term time frame. You can see the structural failures to the downside. So this is the potential beginning of a bearish trend, even if it's on a short term time frame. So we are down at these lower levels now, which is interesting. Here is your structural low. This is effectively your double top. So those of you that are very familiar with your price action, this is a double top. This is an M formation, and there can be quite explosive moves to the downside. So this is on an hourly time frame. So I just want to just share with you our thoughts. At what point you might ask, do we want to start pulling the trigger? That's a very good question to ask. Well, what we do is whatever, like we've been monitoring it on the 15-minute time frame. So we've had this bit of volatile price action. We've seen it across a number of the indice markets. It's all to do with, from what we understand right now, we believe it's to do with the Chinese military entering waters that they shouldn't be entering, and the markets have just reacted a little bit cautiously over it. So we've had just sort of a very brief flush to the downside. But now the question becomes, how much confidence do we have for this market to continue lower? Is there any other news that could impact, the direction of this market? And so we've got a 15-minute flush to the downside, and we're thinking, okay, what's that for? You want to find out kind of why that's the case, right? So there might be some retaliation, or there might be some conflict being created. That would be quite negative for this market. But what you can see that's followed it is a bit of buying creeping in. So that just tells us it's not a massive news story, it's just a small news story. So what we want to see now is continuation to the downside. So we've had the move, we've had the close. The fact that you pull back a little bit like this starts to make it a little bit more uncomfortable. We saw some buying in the next 15 minutes. So now we want to see if this market can close below the 13,666 level. So that's what we'd be looking to get into. So this is a high probability sell trade below the 13,666 level. And because we're looking to sell it, I'll just change it to red. So that's the Nasdaq. And it looks like we're getting some continuation in these markets now. So let's just have a quick look at this first. Okay, so that's our structural level. Prices closed at it previously. So the sell trade is at the 15,040. So this is a high probability sell. So below the 15,041, 15,041 level. It's important to identify these levels objectively, whether price has broken through it or not, because you can always get a bit of a pullback to that level, and it can allow you to get in. Okay. So the euro dollar has just bounced off that 120 level. We're about 10 pips or so away from the Aussie dollar to the downside. we kind of need to be a little bit patient with the New Zealand dollar. It looks like we're going to get that little move in the S&P. We'll just look at the DAX now. So these are our trades currently up on screen. We're going to be looking for that indice weakness trade and the dollar strength trade. That's our trade plan for this session. A very well may change tonight or tomorrow, and so the DAX looks like the first one to go. Just have a quick look at it on a smaller time frame. Sorry, we'll go bigger first. So yeah, it's a decent setup.
We're 10 minutes away from the bottom of the hour and the release of US and Canadian trade data for March. We'll lead with the US data. We're looking for a trade deficit in March of 74.5 billion. Range of estimates between minus 76 and minus 70.5 billion. And that's against the prior deficit of 71.1 billion. To Canada, we're expecting a trade surplus in March of 7 billion. That's against a prior surplus of 1.04 billion. And finally, Canadian building permits month on month for March, seen rising 2%. After a 2.1% increase in February. Just going back to the US trade data, quick notes here from TD. They point out the goods portion of the trade balance rose 3.5 billion in the advance report, with exports rising 8.7% month on month and imports up by 6.8%. They're looking for the overall deficit, therefore, including services, to widen to 74.5 billion, thus put them in line with the market consensus.
Okay, so the only problem we have with the DAX is a stop loss placement. So the entry, let's say 15,000, was 15,224, 15,267. That's almost twice what our normal stop loss would be for a trade in the DAX. So there's the trade below the 15,041. We've just got a profitable risk reward issue. So we're at a 15,000 level. So we've got about a 200-point move to the downside, and we're risking, and we're running in as well into the 50-period moving average, and we're risking 250 points to the downside to make 200 points. So it doesn't really fit from a profitable risk reward perspective. Now and this is the problem you see when you get these little flush moves. So it might be a case of waiting for a constructed pullback, maybe back to the 1550 level, something like that, 15,050 level, and maybe look to sell it at that point. So we don't have these issues with the S&P. Let's see what sort of point stop loss we can put on this one. So 71.70, 41.70 should I say. So we've got like a 24, 25 point stop loss, and the move to the downside, we've probably got a 50 point move, let's say. So we're risking 20 to 25 points to see hopefully a 50 point return. So 2 to 1 profitable risk reward on that trade. Okay, so let's get ready to pull the trigger. So let's just close below that 41.71 level, and then we can get into it.
Just under 3 minutes till trade data. US trade balance for March are expecting a deficit of 74.5 billion, looking for a surplus in Canada of $7 billion, and Canadian building permits seen rising 2% month on month.
Okay, let me show you. Yeah, it should be up there. Okay, so there's our entry below 41.71. What was our entry price? Yeah, 41.69. And oh, sorry, that's on the other platform. Yeah, 41.68 is our entry. And our stop loss is just above this little handle in here, just above 41.94 level. So what we're looking to just capitalize on is this little rollover trade to the downside, and just see if we've got a little bit more downside necessary. But it is a secondary trade trend, so we know that we're going to run into some buying at some point. So we want to try to be quite swift with this trade and not necessarily stick to, you know, a long-term trade to the downside. It might happen, it might evolve, and if that's the case, fine, we'll have mitigated risk on it. We'll look to let it go if it can go.
10 seconds.
But we want to protect our capital to the downside. Basically, that's what we're looking to do as a priority every time we take a trade.
-74.4 billion for the US trade balance, -1.14 billion for the Canadian trade balance, and 5.7% for Canadian building permits. So -74.4 billion for the US trade deficit, pretty much in line with expectations. The prior trade deficit revised to -70.5 from -71.1, so a slightly narrower deficit. Canadian trade balance comes in at a deficit of 1.14 billion Canadian dollars. We were expecting a surplus of 0.7 billion. Prior surplus revised up as well, 1.42 billion from 1.04, and Canadian building permits 5.7% versus 2% expected. Prior revised up to 3.1% from 2.1%.
Let's see if we can get a small little pullback in the DAX, and then we'll be a little bit more comfortable getting into it. If we can,
just taking a closer look at the US data, exports rising 6.6%, imports up 6.3%. The US-China March trade deficit $27.7 billion versus deficit of $24.6 billion in Feb.
yeah. So James, yeah, you think today may be a major red day? Yeah, we haven't had many of them, have we, for a while, with these indice markets, and you could be right. I mean, we could always get a little bit of softening in these markets, and it wouldn't really take a huge amount for that to be the case. But oh yeah, so one other thing to just keep in mind of is the 10-year note. So I'll just bring that over just so that you can see. So this is really one of the developments that are likely to cause a lot of panic and stress in these markets. And it's the 10-year note. It's a good representation, and we're now down below that 160 level, which is quite important. The dramatic steep increase we saw from January to March, you know, it was the rate of increase that was the problem, not the fact that they were pushing higher. You know, if there is, we know that the US government borrow money from the Fed, and they sell government bonds. And what you need for that to be the case, to generate revenue off that expenditure, is you need demand for those bonds. And what we saw from January to March is a lack of demand. kick in. So then the yield starts to push to the upside. And with this inflation backdrop and built up demand, people having more money in their pocket, the massive stimulus packages, all of this is converging into a bit of an inflation story. And it's how fast will the prices of our everyday goods and services increase in real time. That's the big concern, and what the governments and the central banks want to avoid is kind of this hyperinflation scenario where inflation starts to tick higher, and as a result, one means in which the central banks, one thing they can do to try and take a bit of pressure off is to increase the interest rates. The problem with that is we've got such a debt-laden economy, whether it's government, personal, corporate, it's all debt-laden, and the cost of meeting your bills in a situation like that starts to become harder. And if you can imagine, if a government, for example, if they're having to pay higher interest rates, it's less money for other things, other very important, vital services. So that's the trap, and it's the rate of the increase which was quite alarming. And look what's happened from sort of March, April time. The concern has just come out of the markets a little bit. So I think it's fair to say there's not such concern with regards to the inflation story just yet. And the Fed and certainly investors can build in a certain amount of inflation in line with targets around sort of 2-3%. That's fine. It just starts getting a little bit difficult for everyone concerned if inflation starts to increase above that. And that's what everyone will be looking towards. But right now, there's a bit of calm, and that's what I was just going back to, James, your comment there. It might be a major red day. There's nothing hugely significant to suggest that we should be getting a red day. All the quantitative easing's in place. Everyone has money. The pent-up demand is very, very real. Economies are reopening. People are getting the jobs back. The unemployment situation's improving slightly. So really, conditions are actually pretty decent. And the vaccine rollout is performing well, and these economies are opening up. So for all of these reasons, it's actually potentially quite a positive environment for stocks. So we do need to keep that in mind. And that's why we're looking to sell this, but we want to mitigate risk on this trade as quickly as we can. So we do want to trade the environment. So James, the Dow Jones potentially back to 33,760 area. Let's have a quick look. So we're getting a little bit of a pullback off this little move. That's fine. It's we don't get into these markets. We're not scalpers. We're not looking to take 5-10 pips off the table. So we're kind of wanting to let the market decide when we exit this trade. So a bit of a pullback is not a massive problem. Going on to the DAX just quickly. The Dow Jones, I think you said. Pull back to so for us, James, a constructive pullback is inside this zone, 33,760. Apologies, I perhaps misunderstand your question, really. So we're getting this structural failure trade to the downside. So a pullback to 34,000 level would be a constructive pullback if you're looking for a further sell in this trade. Yeah, quite possibly. There would have to be a major sell-off for that to happen, but 230, yep, the market's open and could shoot downwards. Yeah, absolutely. When they get to their trading desk, they look at sort of the market conditions. They do pretty much everything we're doing. We're identifying the sideways consolidating markets. There'll be traders that will love to get involved in that type of price action, and there's many traders that perhaps wouldn't. But markets that they might look towards is this little structural failure trade to the downside. We can easily say these markets are in a risk-off market condition right now, and that's what we can expect for it to be the case. Structural failures to the downside, yeah, quite possibly we'll get further continuation to the downside on the open at 230. So listen, I do apologize. We do need to wrap up this trading session here. We've got, oops, excuse me. No, I don't want to delete that. So so this is our trade plan for the trading session. It's almost being a little bit patient really in this trade. If we don't sort of fully become super active in this session, don't worry about it too much. The week has quite a bit to unfold. It's the start of a new month, so what we're likely to get is kind of direction for the short term, and that will become a little bit clearer. Currently we're getting, you know, pullbacks a little bit across most daily markets, but these indice markets do seem quite interesting to the downside. The question is, how long will that be the case for? Because the primary trend is clearly to the upside. So a little pullback to 1550 might be a decent sell trade, or basically the 1541. Sorry, this platform keeps shifting on me a little bit. So the sell trade below the 13666, so we're actually quite close to that. It is the momentum low in this particular case. Hi Renko, good afternoon. I'm not sure where you're watching us from, but you're very welcome, and good to have you back. Good morning to you too, if it's morning time for you. So let's have a look at gold. Yeah, the gold market, we've been in this little sideways zone, as you can see now. So that's been the price action, and there's just a lack of clarity on it, isn't there? So 5, 7, 9, 11, so 13 days, so 2.5 weeks, we've really been moving sideways between 1790 and 1760. So there's been a $30 to $40 move up and down, and just nothing happening. Now what would be interesting to us would actually be above the 1800 level to the upside, or this market breaking to the downside below that 1758 level. We're just not there in either of these situations at the moment, Renko. So for us, we're just going to be patient right now. We'd expect probably, with the strengthening dollar, we'd expect a little bit of short-term selling, but perhaps longer-term push higher again. So we just need the market to give us a little bit more to work with. I hope that makes sense. Yeah, listen, my pleasure. So look, on that note, we'll be back again tomorrow at 12ish. So if you can join us for that, please do. We didn't have we have a normal webinar every night at 9 o'clock where we plan for tomorrow's trading conditions. We didn't have that session last night being a bank holiday, so we'll have that tomorrow. So we'll have all the charts set up for you tomorrow, so we can hit the ground running. At the beginning of the month, you don't necessarily want to be jumping in, being too excited. Just let price action just take its course, and we'll be able to sort of go with the general. It's really the commitment of others that is important. If there's money coming into markets and we can see that money through price and volume coming in, that's what we want to jump on board. So it's not about what we think will happen. It's not about which markets we like to trade. It's about where is the money going and can we capitalize on it. So that's the key. So these are all the levels to keep an eye out for. It's below that 120 level for the euro dollar, below the 76.90, which is just marginally below these lows. We just want a little bit of a pullback if we can, back to the 71.40. So we look at previous lows to basically capitalize on that pullback. Breakout trades across the indices markets, namely the S&P, the Nasdaq, and the DAX, are all likely to continue lower. We just got to give them a little bit of time, and we'd like a little bit of a pullback if we can, actually, in the DAX. So those are our trades. Details are up on screen. For more information, if you do want to join us for our evening webinars, you can do so. You can do so for as little as $15 a month. So it's not going to break the bank, and that's what we pride ourselves on. We trade these markets every day with our own capital, and it's an opportunity for you guys to jump on board. You get this free session, no problem whatsoever. We've got another wealth of education. We've got over 50 hours. We've got 4 different education courses, which gives you everything you need to know about trading these financial markets. It's a lot of in-depth, a lot of high-quality stuff. We've got our trade size calculator for calculating trade size correctly, something most traders find it very, very difficult to do. And we have live trade rooms every day. So if you do want that partner to work with, you're very welcome to come and join us. Just go over to thelivetraderoom.com for more information. If you've got any questions, there's a chat box there, and you can speak to someone online if you need. So thank you very much for joining us. I'll let you guys go. We'll be back again tomorrow at 12 noon. So for everyone here at the Live Trade Room, give us a thumbs up if you can. Subscribe to our channel, of course. We've got a lot of content coming online pretty soon. So we'll notify you when we go online, when we have these live broadcasts. We'll have other little sort of mini videos and things like that going out as well. So subscribe to our channel, click the bell function, and you'll be notified when we go online. And give us a thumbs up if you can. So much appreciated. So from everyone here at the Live Trade Room, take care, and we look forward to seeing you tomorrow at 12. Bye for now.